Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday, it was almost a flashback to last Monday where we had the Pfizer announcement. I know a lot of you are going to criticize me that I was talking about China pumping the markets yesterday, which I believe that was the news leading into the market open this morning. Now, did we get an extra burst from the Moderna vaccine? Absolutely. But we were unable to trade above last Monday's high. Last Monday, we printed 36.45, we retraced back. This time we printed 36.28. I'll go through a lot of details here in the technicals, but we did get an RXT sell. These signals don't work all the time, but they're highly reliable. They work more than they don't. And I'll go through this in the technicals here in a few minutes. As we continue to look back on yesterday, we saw 10 of 11 sectors up, and it was interesting because we saw the energy, industrials, financials, all leading the way to the upside. And once again, the Russell was able to outperform. And I didn't cover the Russell in last night's video. I will cover it tonight. Also talk a little bit more about the spread that's happening, and I'll show you some ideas that I have on how to continue to play this concept that I've been talking about since July. But as we look forward to today, there is retail sales coming out today. I expect that to have some material effect. It's expected to show a 0.8 increase. There's no other real news coming out today other than there's plenty of earnings coming out. One of the things I want to discuss briefly is how the markets reacted to the vaccine news. Last Monday, like I said, we traded up to 36.45. We saw the markets retrace, but it was interesting that today Moderna was up just about 10%, while Pfizer was down 3.3%. So if it's all about the vaccines, why aren't all these stocks going up? I continue to believe there's something else going on here in the backdrop, which is driving the underlying bid. And I do believe it has a lot to do with the shifts in the markets, both on the interest rates, driving the small and mid cap markets higher as we're seeing that rotation continue to unfold. As we're likely to see us go into a little bit of a slide backwards over the next couple of days. I know I was talking about these big numbers. We already saw it spike out. This is one of the things that continues to happen. We see big surges in the markets, then they backfill. Just going back again to last week's action, we traded up to 36.45, traded all the way back down into the mid to low 35 handle before rebounding at the end of the week. So we're continuing to see a lot of grinding out in these markets. Can the vaccine trade continue to go on? We'll have to see. I think it is overall a positive. We're seeing several states start to emphasize and start to do secondary lockdowns. California, New York, the typical suspects in this lockdown mania is continuing. Now, whether it's justified or not, that's not mine to judge. Just talking about what is happening. And the occurrence of this is not affecting overall market sentiment. A few months ago, if we would have seen this type of action, most likely markets would have declined substantially in reaction to that. As I continue to talk to you about, I don't think we're going to see any major reaction to any lockdowns or any restrictions in the economy. Once again, as I've talked about, a lot of sectors in the economy have adjusted how they're doing business going forward. The biggest thing that's coming out of this COVID situation, that many elements within the economy is being restructured and how they're likely to go forward. In the end, there will be clear winners and losers, and at some stage, maybe in 2021, we'll start to see normal travel habits and other things start to come into play. But for now, we're going to continue to operate in this restrictive environment but I don't see at the moment the reaction to the shutdown news or the increase in COVID cases really triggering any major selling here. As I've been talking about over the past several days, as we close over some key numbers, the higher projections are still valid. We're still seeing a lot of underlying momentum in the trends, especially on the weekly charts. I'll go through all the details here in just a few minutes. We're continuing to see interesting things go on in our database and other aspects which are driving the market higher on balance. Let's go ahead and take a look at the charts, see what they're telling us for Tuesday. As we begin the review of the WaveTech database, we're continuing to see a strong rotation on the short-term models. We've now reached the 65.83% bullish ratio, saw another 1,000 new buys coming in with only 140 sell signals. This bullish ratio continues to occur, and as I discussed in last night's video, we are not in an overbought state yet. We're still in this beginning phases of this cycle. Currently, we're only 11 days into a 40-day cycle. There's at least 25 to 30 more sessions before we start to get into that overbought area that we can start to think about some sort of retracement or correctional phase to come into play. The other thing to focus in right now is we've also have entered 11 of the 12 sectors are long. As we look at the list here, across the board, basic materials down to utilities, they all have been on anywhere from 5 to about 10 sessions right now. Every sector has a decent return for the most part, a couple laggards, healthcare and utilities. It is interesting to me that healthcare is one of the laggards in this environment, especially since we're talking so much about the vaccines and other medical issues that you would think would be into play. There's definitely some things to watch for in this rotation. As we begin the technical review, the Russell versus the NASDAQ trade continues to move higher, and this spread looks very good. I came up with a strategy that you could do. It's a lot more aggressive than just being long the Russell and versus the NASDAQ. What you can do is actually put an inverse on, and I'll show you what that trade looks like. This is the IWM versus the PSQ, which is actually going short the NASDAQ. So this is long the IWM, the small cap versus short the NASDAQ. So this spread is really moving. If you go back to July when I started talking about this, it's moved pretty substantially and is likely to continue. As we review the weekly chart on this spread, it is a huge trade. It actually started way back at the lows in April. In this zigzag formation here, this is where I started to talk about it in July. I had not looked at this chart, but this is a very aggressive way to play this. So it's long the IWM and long the PSQ, which is an inverse on the NASDAQ. I continue to cover the Russell in the same area here as we're seeing a very sharp surge to the upside. The Russell did also get an RXT sell. The RXT was 1778. The close was 1785. We're likely to see a 1 to 2 day backfilling here, but overall the momentum on this trade is substantial. As we review the PPMs, you'll notice they're all in trend mode, experiencing sharp acceleration. On the weekly chart, we did trade up toward the R2 number, 1799. I discussed both in the S&P and the NASDAQ last night that it's likely that we will trade at least to R2 and possibly R3 this week, which would take the Russell up to 1828. The next market we'll review is the S&P futures. We did not get an RXT sell in the futures, but we did get one in the cash overnight, we're seeing about a 0.5% down 19 handles right now, trading back at 3603.50. The low so far has been 3603.50. We're trading the lows of the session as we speak. S1 is 3608, so we're through that number. S2, 3592. We could trade that low. I'm not, most likely that will be the extreme if we trade back below 3600. On the upside, the high so far tonight's been 3630. R1 is 3637. So R1, S2 is the likely range to trade in today. We're also noticing that the PPM at 1 is turned down, but it's still up at 0.69, and that is suggesting that we're going to see around the 35.75 to 35.90 will be major support over the next 2 sessions. So I don't see any major decline coming from this position. We're likely to print these levels I just mentioned. As we go to the SPX, we'll see that we did get that RXT close. The RXT yesterday was 36.23. The close was 36.26. In fact, there was something that was very interesting. Those of you that have watched the live stream know that I always watch that last 2 minutes of live trading and then the 2 minutes of futures trading after the cash closes, and saw something really interesting today. With 2 minutes to go, the liquidity completely dried up. I mean, completely. There was literally no offers, and they bid the market from around 36.14 all the way to 27 on the close. It was just an air pocket. When the final minute came in, the liquidity showed up again, but it showed up at a higher price. It was interesting. I don't know if it was a platform glitch that I was watching, but I've never seen that type of action. It was very sustained for over a minute that the liquidity, there was no liquidity. I would have done anything to have been able to record that yesterday and be able to show you what I'm talking about. But that was an air pocket on the close, was just massive short covering, and the final 2 minutes of trade, it continued to be quite stable after that. That pattern suggested there was a lot of buying on the close. But as we come into overnight, as I mentioned a minute ago, futures are down about 0.5% right now. They're continuing to be under pressure. This RXT sell suggests that we're likely to trade toward the S2 number, which is 3606. That is about where we would come in right now. S3 would be 35.96, just below the 36 handle on the cash. I think it'll hold that 36 handle, but we definitely won't trade much below 35.96. So look for a R1 S2 number for today. I would expect to come in weaker if we stay like this overnight, with some rebound as the markets open early in the session. As we review the SPX weekly, I mentioned this in last night's video, is the expectations are that we would print at least an R1, which we did. We printed 36.28. The R1 is 36.31. I'm not sure we're going to be able to print much above that. We may have actually printed the high of the week, just like we did in last week's market, where we printed on Monday on the same type of news that I mentioned earlier on a vaccine. And we're seeing some backfilling here and not a lot of enthusiasm. From a pure market grid viewpoint, an S1 trade would be a pretty substantial decline right now. That would put us back at 35.38. It's certainly possible, but the PPMs are cutting through first, second derivatives. Everything looks pretty solid. My expectation would be that we will hold the support levels and ultimately probably move up toward testing last week's high, 36.45, with the potential getting up to an S2 weekly, 36.83. Next market that I'll cover is the daily NASDAQ. We're seeing a much different configuration. The NASDAQ is not under the same amount of pressure that the S&P is in, and we're seeing it trade virtually flat, down 7.75 on the session. We'll also notice that the market grid has narrowed substantially, so volatility has contracted. We also have the 10 10-day moving average right underneath this action, 11,899. I talked about this in yesterday's video, that 11,900 would be substantial amount of support there. The PPM 1 is at a plus 0.62. PPM 2 is cut through its first and second derivatives and is up at 0.14. PPM 3 is positive. It is above its first and second derivative, but actually losing some slight momentum. It's not really in play right now. The 10-day moving average is the primary average to watch, and if we did trade down to 11,900, we should see a decent bounce off of that level. The weekly grid has a bit different story to tell. Much more volatility potential on the upside. 12,156 is R1. We got up to 12,096 yesterday. S1, 11,710. We've seen 11,851 so far this week. As I said, I think for this week, we're likely to see an S1, probably an R2 level on the NASDAQ with that key number that I just discussed on the 10-day moving average at 11,900. The final market that I'll cover tonight is gold. It's under a slight pressure. We did trade down to a key number in yesterday's action as we traded down to that 1861 level, which was the STX number. STX yesterday was 1861.30. The low was 1861.50. Get a nice bounce off of that and finished at the 1887 level. In the overnight action, we're continuing to see gold hover just below these moving averages that I've been discussing between 1891 and the 1898 levels. These are going to continue to be some resistance here. The PPMs are completely flat and trendless. There's no uptrend or downtrend on a short-term basis. Basically a sideways range. Continue to expect to see this 1860, the extremes of 1848, 1851 that we've seen over the last 2 weeks be major support. It's very possible that yesterday's low at 1861 was a key number. We're going to need to trade back above the 1898 level to actually get any type of positive activity in the markets. If we look at the weekly chart, I've discussed this as well, is that the 21-week moving average is at 1916. It is still up at 0.18, but we're seeing the momentum actually start to bleed off, and there's just going to be a ton of resistance between the 1907 and the 1916 level. It doesn't look like we're going to be able to get above that level, and as I said, it appears we're locked between, we'll call it 1850 and the 1916 level, and more importantly, that 1898 is major resistance for the next couple of days. I don't even believe we can get above that level at this time. This will complete the video. Thank you for watching. We'll talk to you tomorrow night.